Hey everybody, DayTraderRockStar. In this video I am going to describe and show you and break down what I call a mid-pattern divergence. Now divergences are my bread and butter trade. I love them, but there's even a stronger type of divergence. It's my mid-pattern divergence. And to kind of explain that a bit, typically we're looking at our overall chart, our trend lines, our channels, the directional flow, the moving averages, support and resistance, and the stochastics. All these here are all put together in the blender, and we make a nice little trigger on this when things line up. Some of the more important things on my chart are the trend lines and the channel lines, and understanding the importance of those. The other thing is, of course, the stochastic divergence, which is probably the number one thing that I pay attention to. And typically we get this divergence in a channel that is at the bottom of a longer extended move. The divergence setup here is a change of, it's understanding the change of momentum taking place, and it's after a nice little move down or a nice little move up. Now, here we have a situation where this is what I call my mid-pattern divergence, and it takes a while to get used to it. You just have to look back out there and take a look and make sure that when you're doing a regular divergence, say this is a divergence for argument's sake, that this was higher, and you had a nice divergence here. This divergence, we look back, clears all the lows here, clears all the lows going out for months. And that's what typically of a divergence is. A mid-pattern divergence is something that's already broken higher, started to move up, and then pulled back and gave us the divergence. All right, so pulled back and gave us the divergence. And it's not that easy to find these. And this is a perfect example one. And there's other indicators that are lined up here on JP Morgan that make it such a good setup. So you had to move down here, you had the gap up, the consolidation, but again, any of these indicators on here, all these indicators are part of what we call the HPS methodology, and it consists of 5 different indicators, and the trend lines and channel lines, pattern recognition. These lines become important because it represents a pattern. It's also representing a trend line, also represents other things that we use. So we have that breakout, we come back, we start chopping up here, we get a gap up, and we pull back. So as a regular divergence, as you learn a divergence here, the first stage of divergence is a low. So here's our first stage right here with that blue, we have that low. And we're going to consider this being our low, even though it's not a low. You notice it's not at the bottom of a channel. It's not at the bottom of a channel, but it is a low here. And then the market gets a little pop like a normal divergence does, and then pulls back, and we get a lower low. And that lower low, it can be seen here with this candle. I have a little arrow pointing to it right there. So now we have the lower low. So we have a low and a lower low. Yet we have the stochastics pulled back, and we cross back up above that 20 line. So we have this divergence, which is not at the bottom of your pattern. Now, there's not a big channel here. I mean, you do have an argument that there's two points here, which is a trend line. And when you have 2 points like that, what you want to do is you want to copy, paste that, or just, I don't know if I can do that with, there we go. I want to make a parallel line. I'm going to put it up against that channel line right here. And as you can see, this kind of extends. We could extend this out. Edit that out and go down, and then we edit this one out and go down. But right now we're really holding true to this 1, 2, 3 pattern, and a divergence inside of a 1, 2, 3 pattern, even though it's so short and kind of like not a big channel in this is still a very bullish setup because it's a mid-pattern, a mid-rotation up, it's moving up, it's kind of a pullback divergence, and it's going to continue to push higher. So look for this. We took a bigger position in it today. And that was my best bet of the week going out. So by the end of the week, hopefully we're going to see this here higher. Now, the market conditions always affect charts. That always trumps news, trumps analysis and chart patterns. If there's some severe news out there, I just want to throw it out there. And Trump news trumps everything. But without that saying, this is a fantastic setup. I expect high confidence that this is going to actually push higher. Our first level will be right at the top of that. That's 112 and change. Now I have common shares on this instead of options. But normally this looks good for options of 112 going into December. No problems with that. And then above that, there's a big candlestick here at 114. And that might be a good secondary target. This is a short-term target, but right now everything's pointing to upside here. Market was down about 400 points today, and look at JP Morgan. The reason I added to it today is because of that strength. Didn't really sell off too much. Came back strong, pulled back, and this is where we are. Look at this. This is a very nice looking chart. It wants to push higher. And that's what we call a mid-pattern divergence. So I hope you understood that. Understand what makes that. And that's a part of the school of stock. So if you're interested in more in how to trade divergences, this video is going right into the school of stock for the students there. There's a whole course that has about 50 lessons and multiple hours of educational videos based off of the divergences, time frames, how to set up your charts, how to do everything with divergence, and how to trade for a living. All right, so check it out. That's www.theschoolofstock.com. And I'm kind of adding this. There's a video to it. I need to update it on a mid-pattern divergence, so I wanted to update that.